Hello family, how you doing? We're back again. This is Coach Tom. Usually I'm talking about basketball, but right now I'm talking about finance, stocks, investing, how to get out of debt. And today we're still focused on the new investor. I think it's important that we help out, especially the start of 2022, that we stay our focus on the new investor. Last video we talked about index funds and what that meant. Today we're going to talk about something that's very similar to an index fund, but a lot more tradable throughout the day. Those are ETF. And we're going to get into the breakdown of what those mean, why they're more beneficial than maybe a mutual fund, depending on what type of trader you are or what type of investor you are, and how they can help your portfolio if you're a new investor. I think you're going to like what we got. Stay tuned. Remember, we have to plan, we have to prepare, and that way we're able to perform. We got us. Can't wait to get to the video. Let's get right into it. All right, so the first question you're going to have is, what's an ETF? An ETF stands for Exchange Traded Fund. And I'm going to get into the breakdown of exactly what that means and the difference between that and an index fund. Are ETFs better than index funds? Well, the biggest difference between ETFs and index funds is that ETFs can be traded throughout the day like stocks, whereas index funds can be bought and sold only for the price set at the end of the trading day. However, if you're interested in intraday trading, ETFs are a better way to go. Like index funds, ETFs can also mimic indexes like S&P 500. It can mimic the Dow Jones. It can mimic the NASDAQ. But the biggest difference is that you'll be allowed to exchange throughout the day. You can make trades throughout the day, but you can't do that in index funds. So some like the flexibility to be able to get in and get out, run some options on those plays if you choose to or choose not to. Again, for a new investor, be exposed, diversified through many different stocks, follow an index so it doesn't have the same volatility as, where to say an individual stock, and it allows you to just feel comfortable without having to go and do real in-depth research on evaluations, on PE ratios, or any other things, even looking at the charts to decide, if there's signals that's telling you if a stock is going to go up or down. You don't have to get involved in any of that. It's an easy way, especially for a new investor, to really get into the market. Another question that we get is, well, what's the difference between a mutual fund and an ETF? A mutual fund is a type of investment vehicle consisting of a portfolio of stocks, bonds, or other securities. Mutual funds give small individual investors access to diversified, professionally managed portfolios at a low price. Mutual funds are divided into several kinds of categories, representing the kinds of securities they invest in, their investment objectives, and the type of returns they seek. Mutual funds charge annual fees called expense ratios, and in some cases commissions, which can affect their overall returns. The overwhelming majority of money in employer-sponsored retirement plans goes into mutual funds. It's like when you have a 401k plan. A lot of time, those are mutual funds. But if you're a person that wants to get really into the market, let's take a look at a couple to see how they work and what they've been doing and how they've been performing over the last year. First one we're going to look at is VTI, Vanguard Total Stock Market ETF. Currently sitting at $238.50 a share. On the day, pretty flat. On the year, up over 20%. What is in the holdings of Vanguard Total Stock Market ETF? What's in this VTI? As of November 30th, 2021, here are some of the sectors that VTI is currently involved in. And you can see the percentage breakdown in front of you. The largest is technology at 26.52%. And then next is the financial services, 13.04%. And we've talked in earlier videos about rotating and being a little bit more into financials, expecting that, and healthcare, expecting that we're going to hike interest rates. We know techs might get beat down some. So if that's a case for you, you might not want to get into this ETF. But if you're not worried about that, then this is a good one, I think, to track. Again, this is not financial advice, but this is what Coach Tom is going to do. Let's look at the top 10 holdings of this ETF. Great companies. You got Apple representing the most. And again, these top 10 holdings represent 24.85% of the total assets. You got Apple at 5.54%, Microsoft at 5.31%, Amazon at 3.22%, and Tesla at 1.96%. And look, you got your Google, both Class A and Class C. Nvidia, a great tech stock. And Meta Platforms, in case you don't know, that's Facebook. And you can't go wrong with JP Morgan and Berkshire Hathaway. So these top 10 holdings are studs. These are pillars of big time companies. And I believe this is a great ETF, great way to diversify, great way for a new investor to get themselves inside of the market with some great companies. Another ETF that I like, ticker symbol VOO, Vanguard S&P 500 ETF, currently sitting at $432.98 a share. As you can see on the day, again, pretty flat today. Over the course of the last year, up 24%. So again, growing. Let's look at the sectors that this ETF is in. Again, technology, heavy. Financial services, consumer cyclical, healthcare, customer service, industrials, consumer defense, energy, real estate, utilities, basic materials. Let's look at the top 10 holdings. The top 10 holdings represent 30.25% of the total assets as of November 30th. Again, we got Apple, Microsoft, Amazon, Tesla. We got Google. We got Nvidia. We got Meta Platforms. We got Berkshire. We got JP Morgan. So a little bit heavier, about 5% over the VTI. And again, if you're worried about the tech, then this might not be the ETF for you. But these are great companies. They don't have a lot of volatility, and they'll give a new investor a chance to really diversify and have some great companies to be a part of in the market. Another one that was recommended to me, I did a deeper dive and looked into it. I actually like it. I actually went and bought a few shares. We have ticker symbol SCHD, Schwab US Dividend Equity ETF, currently sitting at $81.91 a share. Again, pretty flat on the day. What has it done over the last year? Up 23.89%. These ETFs, you could have invested in these a year ago, if you were a new investor a year ago, and you'd be sitting pretty above, what you expect to get on a return of 10% in the market. To be getting 23% returns and over 20% returns, you'd be very happy about how you did. This one's more heavy on financial services, and we talked about the raising of the rates, so this might be for you. Industrials, technology still there, consumer defense, healthcare, consumer cyclical, communication services, basic materials, and energy. This is as of January 7, 2022, so a little bit more recent. The top 10 holdings here represent 40.43% of the total assets. And we start off with Merck. We got some Coca-Cola, Pfizer, Cisco Systems, Amgen, Verizon, Broadcom, PepsiCo, IBM, and BlackRock. Again, some great companies, great way to get some exposure to the market if you're a new investor. The last one that I think you should take a deeper dive, do some due diligence on, and look at is the SPY, ticker symbol SPY. Currently sitting at $470.81. This one really tracks the S&P 500. On the day, kind of flat again. At least it was green. On the year, see the theme here? 24.26%. I know we want to get so excited about all these growth stocks and we want to, see these incredible returns. But getting this type of growth, especially if you're a new investor, you'd be doing very well. You'd be sitting pretty. You'd be exposed to a lot of great companies, and you'd be able to trade and feel comfortable without the crazy volatility. We got some tech, financial services, healthcare, some of the same things that we've been seeing in the other ones. Let's see what his top 10 holdings are. Apple, Microsoft, Amazon, Tesla, Google, Meta, Facebook, Nvidia, Berkshire Hathaway, JP Morgan. See the theme here? If you're a new investor, you can look at some of these ETFs and see what some of these big companies are. And these sometimes are the pillars of your portfolio. They keep you in the green. And this to me is a great way, along with index funds. But in this case, if you're a new investor, a great way to get exposure to the market and to be able to help yourself grow your portfolio and start to get comfortable with actually being in the market. So make sure you hit the like button. Please subscribe. Helps with the channel. Trying to grow this so my family understands that we got us. We prepare, we plan, and we perform. And the more and more we do that, and the more and more we help each other, the more that we can do better in this tumultuous times.
Like you lost another one.